Hello everyone! The Binance exchange is putting its money into Lunc Classic, but the coin is not growing. Instead, it has already managed to drop by more than 25% in the last 2 weeks. In this video, I will explain why this happens and what move we should expect next. Also, we will touch on the subject of the UST Classic, and you will find out why the token rose an incredible 123% for a bear market, whether it can recover to $1, and what's happening with it now. Let's not waste a minute. Here we go. Guys, I am sure you are already familiar with Binance's token burning mechanism, but if that's not the case, please watch the second video on our channel, where I touched on essential topics concerning Lunc Classic and the exchange burning mechanism. Let's now take a closer look at the numbers, how many coins Binance has burned so far, and why this action by the exchange has not met the expectations of retail investors. The key point is that the community wanted to burn 1.2% of each transaction on the platform and ended up with something like 0.1%. There have been 2 burns since Binance decided to reduce the total supply of Lunc Classic. In the beginning, the team destroyed about 5.5 billion tokens. Afterwards, they burned it much less. Such negative dynamics tell us that this coin began to trade on Binance in 2 times less. Accordingly, holders' interest also fell by half. I see the situation the following way. From the beginning, most investors underestimated the risks and the effect power on the coin's price of the exchange's decision to burn. That's why we saw Lunc Classic rise by 62% amid recent rumors. This movement was only possible thanks to the holders who believed in meaningful change. But once everyone invested their money, there was no more factor for the token pump. Why the combustion mechanism wasn't the second factor? It's very simple. If you look at the total Lunc Classic supply now, it's an incredibly huge number of almost 7 trillion coins. If you calculate it, you will realize that the exchange destroyed only 0.12% of the asset's total supply. Such a tiny percentage simply could not strongly impact the coin price. Of course, in another case, many traders were interested in the asset and traded it, continuing to pump the price. But unfortunately, it wasn't meant to be, as all wishing had already made their bets at the rumors stage. The third incineration is expected next Monday, that is October 17. A positive moment may be the increased interest in Lunc Classic, which will consequently allow the exchange to burn more tokens. But as you have already seen from my calculations, it is unlikely to strongly affect the price. In such a case, it is more advantageous to hope for additional speculative reasons to allow the price to soar again than to expect a significant effect on the burn on the coin. So, what do we have in the end? Naturally, this rate of coin destruction is very low. As I said in my recent video about Lunc Classic, many investors don't want to burn tokens because they're afraid the rest of the community won't do it. And I have to say that such apprehension really makes sense. I want to convey my main point that you can't burn around 90% of the Lunc Classic offerings, hoping someone else will do it for you. Everyone should destroy tokens, not just a tiny part of holders. A massive problem of the current situation is that many people don't want to part with their coins, prefer to do nothing and only wait for their investments to soar. It's one thing to vote and then simply sit back and wait. The other thing is to bring this plan to fruition. Even though the exchange has already burned $3 billion, the price is only decreasing. In fact, they are depositing this asset with their money because they have decided not to profit from Lunc Classic commissions, but instead to pretend that they're trying to help the community. The current situation is more like an action focused primarily on attracting more users directly on the Binance exchange. And to confirm my words, let's look at the Lunc Classic chart. Since the decision to burn coins, we have seen a 29% drop, but it's also worth saying we can fall even lower. The 2 lines you see on the chart are the closest support levels. If the community doesn't figure out a way to pump the price, we could end up at these 2 supports, which would amount to a 15% and 30% collapse, respectively. But I wouldn't have used technical analysis on such an asset because the probability of recovery in most cases will tend to be 0. Why? Firstly, after the Terra Luna blockchain was cracked, the Lunc Classic token became a purely speculative asset. Of course, in theory, there could be some speculative news, hype and price pumping, but I don't see any reason for long-term growth yet. If the talk around UST Classic will only subside and the news will not affect the asset price, we may be back to the previous prices. In my opinion, such a horrible scenario with a 65% price drop is unlikely, but it's worth considering anyway. Folks, next I'm going to tell you about a chance that recently appeared for UST Classic token holders. But there is one more important nuance. In the meantime, please subscribe to our channel and give this video a thumbs up if you like it. Join our Staleforman family, and we continue. Now, let's talk about the USTC coin. As ridiculous as it sounds, stablecoin has pleased its holders by 123% in just 4 days. What's the deal? On October 9, a well-known developer in the crypto community, Tobias Andersen, offered his vision of how to restore the USTC peg to the US dollar. The document is very well painted, with beautiful GIFs and pictures. Add to all this some developer experience and the complete desperation for all those who lost most of their money on this coin. We have a situation where investors believe in his plan and buy a token on a positive news background without even thinking about the possible failure. But in short, without going into details, he simply offered some options to restore stablecoin to its former price. That is, the price rise is based solely on speculation. In other words, investors bought the coin at 3 cents with the hope that in the future, perhaps, such an offer will be accepted. It will work and the holders will be able to get 3,200% profit. How do you like that? But the problem is that it's much harder to do than it might seem at first glance. For such an initiative to work, it takes a lot of time and effort. As a prospect, developers will create different pools with a redundancy system. Such initiatives will need to be supported and participated in. But that doesn't mean we'll see USTC at $1 tomorrow. Most likely, we will see a picture that the asset price will move like this. And the main reason for such a movement will be the news of what is being done and what is not. In the distant future, perhaps, investors who have held tight to their USTC coins will be able to get their money back. Unless, of course, they haven't already left the market. But at this point, it's just a theory. And that's it for today. This is the Coin Report channel. Thanks for watching and see you later.